Qterra. What they seem to be doing is it's an energy company, right? There's a big thing on energy now as far as the global concern, including the fact that Russia has stopped all energy exports to Europe, and it's causing a little bit of chaos during the winter times. Regardless of current events, which you do have to keep in mind when you deal with anything stocks. Some category stocks could be affected by certain events. So that's why in this case, I'm prefacing this particular one with energy and the issue of today. Now, here's where the technical comes in. This CUTR, Qterra, had a range at one point in time. It went up as high as 43. It based around 37 and then it dropped, right? Now, look at the future. We're currently in a pretty chaotic market, right? Everything's basically down, but this somehow is up. Now, again, looking at, let's say Tesla, right? This one's actually a healthy one. It's very similar to what we saw. We know that we can depend on Tesla in most cases because they're still doing pretty well under the conditions of the current events, right? Apple's also on a similar trajectory up. But then we look things like what was the other one? Let me see. I had it right. Mara? Was no. Oh, BYND. Beyond Meat. That did great for a while. It was up at 239, but now it's at 14. Right. So here's kind of how we're really playing this. It's all based technicals, but fundamentals on the end. First, what we saw before with CUTR, that's an energy company. So of course there's going to be an energy positive because of the events happening now. Second, if you take a kind of technical observation of this section of the chart, this was here. Let me do this real quick. All right. So this and this. Where? Go back to CUTR. All right. This we see here is basically what's happening here, right? There's a consolidation period. If a chart never has any history, we don't know where it came from. It just popped from the beginning and then did some crazy things. We don't know the price, right? It's just chaos. This pop is huge week by week, right? So this difference here is pretty huge. But when there's no history, we don't know where to base it. But this gives us a good history for the future because now this bump, which may be the future of Beyond Meat also, we don't know yet because this downward trend here is basically what's happening here, right? It's down based and it stayed down here for a long period of time. But it popped back up 2017, right? So it had a new exciting adventure, we can say, and it really tried to find its price. Now here is the important part because we have found a price, in fact, a price that's so good, it used to be a high before, but now this resistance that we couldn't pass, if you can, if we zoom in, we can see that here we try to go above it, but fell with one candle. That doesn't count. That one big fall underneath basically states that we should not be up there, right? At that time, always remember that we're talking about that time period, meaning in this case, the line of 2005, right? This candle. But as it continued, it hit that same area twice. Did a double top, a very important spot, by the way. This double top basically tells us it's not a perfect double top, but because the second candle was such a huge rejection, we can consider it a double top. And this basically gave us a huge value to this line. This line becomes extremely valuable to us. On the case of, and I'm going to make it green because of the value, in this case, this line becomes very, very strong. It becomes a goal to break, right? So we pass time, we break it. Now watch, you're going to see this line play many different roles, Now we break it, we come back down, we test that same location. This has to happen. This is one of the most important things for a natural growth to the next level. We need to not only go up above that key point, we need to go back down and say, hey, I don't want to be down here. I want to bounce off, right? That's what we need. This is healthy. And again, healthy and healthy, right? This is good. This shows us that we really respect this line. It's become a very important level. Every stock is different, and every stock is going to have a different line, or many different lines for that matter. But again, the key to recognize is the value this line has now gotten, not only from the previous double top way back here, but now we're passing it and bouncing off of it multiple times, showing we're done with the bottom. We're done down here. We are not coming back down here, right? That's what this means, and that's important. And especially during the current times, it's amazing to see. So, of course, we did go back down, right? We did go back down, but here's the case. That's the first test. We have to do it multiple times. Some stocks more than others, depending on the strength of the stock. But in this case, we tested it so many times. We fell down. We came back up. We realized that that's an important line. We broke down again. Now that we're above it, this is where I'm really focusing. This is the important part. This is why I made this chart a part of my session today, of my description, of my examples. This is a very important piece. Notice where it's bouncing. Very close to where we were before. Now, this line can move up and down based on the previous values, right? Not too far, but I would still keep it around where it was. There's not enough points to touch to make it work there. So what this is telling me is potentially we can drop down a little bit further, but this point, because it's on the pivot, it could be the next leg up, because now we have found comfort in this. We have made this situation very much true. We are not coming back down here anymore. We are now removing this level from ever being something the company touches, unless the company really fucks up, right? The fundamentals always matter. But psychologically, with technical analysis, people have been, they're done. They're done with the low prices down here. They don't want them anymore. This shows this. Not only did we consistently bounce, we tested it so many times, but now we're finally not even bouncing, but we're gapping from it. We're done with it. We don't want that price anymore. We're setting a higher high. That's the important part. The next step is, well, we're going to keep setting a higher high. I don't know how often, but it's going to start looking like this. Whether it's right now as it is, like the way I'm drawing it, or like further down the timeline, or like a little bit here and then timeline and then more bumps and then timeline again and then more bumps. Who knows the pattern in which we can't predict that, but we can predict that it is comfortable where it is, and it does not want any more here. It wants to move on. It wants to go to the next level, and now we're really going to be focusing on, hey, this is kind of becoming a bottom. I probably should buy here. Because what it looks like is we're having some pretty big breakouts with some really strong support. So now we have 70 cleared. 70 is a place that is nice and easy to get to because we've already went through it. Once we go through certain values, it's easy to come back there again. And since we've broken and gotten up to 74, well, that's nice because now we're going to just kind of flutter in between because we've been here before, right? And eventually break out. That's important. It's also important on the downside. That's kind of how the lower lows end up working, right? So instead, had this chart done the opposite, and instead of going up, it made another lower leg, right? So one here and then a lower low. Then that becomes the opposite. We've touched this section of the graph. Now we're more vulnerable to stick in here. Right now that we've broken down from previous locations, and that would show that a lower low, lower low, lower low, lower low would continue because it's been pretty balanced up to this point. Up to this point, there was no particular observation that you can say, yeah, it's going up, yeah, it's going down. It just looks like it's going up and down forever. Just basically a swing trader's dream, right? Going from $13 to $38, like doubling your money constantly. So that's one of those situations where it's like, if I was looking at this part of the chart, I'd say this chart is like right here, this chart sucks, right? Then I move a little bit further, right here. I'm like, okay, we're testing it again. We seem to be interested in this particular line, this $38 value. And then boom, we break out. I'm like, oh, even if I'm over here, even if we break out and then come back down, I would still be like, hey, like we're testing it, we're below it. We have a lot of experience here. We've been here. This value is very comfortable for us. So we're not going to go for lower. And then boom, right? I just found this through some of my filtering of data sheets and companies. That's going to be in the programming section of the course where we're going to go through how to take data, use programming to organize it, to make it fit models and kind of what data you should really be looking for, right? So that's the other side of trading, and it's not required. It's not required to know programming, but you can see right now in front of you how easy it is for me to organize all this information. There's CUTR. Oh, where did I get it? CUTR. Oh wait, no, yeah, CUTR here. I just went through the top companies here, and then there's more that I want to go over. But you know, that's important. Being able to look at data and not have to take hours to sift through it is also a boost to your productivity, utility, and your overall revenue. Because the faster you can figure this stuff out, the basically faster you will be able to make it before it's too late, right? So those are the kind of concepts that you kind of work with. You have your fundamentals, which is just the base component of how a company is doing. Is it doing good? Is it doing bad? Is it paying its employees? Is it making money? What's its debt like? You know, what's its assets? If it needs to liquidate, how much can it liquidate? Those are the fundamentals, which really make the stock. You know, we've seen the fundamental breakdown of Nikola, right? That in itself basically showed us that it was a bad stock. We knew that from the beginning, since they try to push their trucks down a freaking hill to make it move, right? I know it's true. You just have to find it. Go Google it. It's seriously true. There's people like this out there. So we know for a fact that the downward motion comes with a still up, down, up, down, up, down sort of flow. And when we have that up, down flow, that's our natural movement of stocks. We could be neutral going up, down to the side. We can be positive going up, down to the upside, and then we can be losing like Nikola and going up, down, but towards the downside, right? Those are the things we keep track of. And we try to use fundamentals to pick good companies for investments, not for trading, for investments. Fundamentals are strictly for investments. Something you want to keep for a couple of years, 10, 20 years, go do it. Fundamentals are what you need. Technicals can help get in at the right time, but in the end, technicals will be useless because you're going to be staying in there for 10 years. So why even look at the technicals, right? Maybe you'll look at it 10 years later. Technical analysis, however, is for us to make these quick moves to find things like, for instance, here, if I saw that it touched here and it based down at a higher level, it's been making higher highs for a while, right? So if you look at this, if I was paying attention to this company at that time, I would be looking at this particular trend. Higher high, higher. And then even though we're hitting this and breaking down, just because it's forming a new higher high here, I would start buying in this area, right? Because after this major hit from this line, this resistance line, if it was a weak stock, it would have went down fast. It would have been a double top and it would have been a downward, right? But because it didn't would be the reason I would be getting in, because I see that it's basing maybe like 3 candles in. That would be right here. So I see that it stops. Like here would be, okay, I'm watching here, seeing what happens. It breaks out of this pennant. It goes up, down. I'm like, all right, we're going back down. What are we going to do? And then we hold. And then I'm like, okay, this is probably where I'll get in. And then we go up and I'm like, all right, I'm going to double down. I would go in small amounts, of course, and then double down those small amounts when I get more confident in my moves. and then continue. This one looks bad, so I'm going to hold off and I'm not going to buy, I'm not going to sell. And then during this, I'll probably double down again and boom, boom, boom. Now, the end case is that you get out as best as you can, but you never know when to get out. Me, I'd probably get out somewhere at the end of this green line, because once I start seeing the volume start going down and these dojis coming to fruition, I'll probably be like, I'm done. You know, it could go down at any moment. But it did end up going up to 60, so I would have missed about 15 bucks. But in the end, I would have went from 29 to 45, and you know, that's not a doubling. Sure, the doubling's way up to 60, but it's still a comparable. It's still like, I don't know, 60, 70% from what you put in. So that's what you're looking for. Those are the kind of strategies. Like, yeah, you can't predict what's going to happen, but your idea is to enter cautiously, follow up with positivity when things happen the way you want them to happen. You continue to increase. It could be like one share. I do maybe 10 shares. I do 10 shares. I would have done, yeah, 10 shares here, or 10 shares here, another 20 weighted, 40 shares, maybe even more, right? 40 shares, and probably I'll keep it at 40, and then I'd have 40 shares being sold, maybe 20. I'll probably, what I would do is I sell 50%. I go in slow, but I get out quick. So I would sell 50% of it here at the 42, wait and see what happens. I'll probably sell another 50%, which would be 10 sold. I'll have 10 left. And then I continue to wait and just wait and just wait. And I'll probably get out somewhere over here when I see the volume pop, right? And I'll get out somewhere here with 10 only, right? So that's the way. You go in slow, you get out quick. You want to do it gradually over time, and you want to adjust. That's a technical trader. That's a swing trader. That's a day trader. You want to base your movements and your dedication to a move based on the follow-ups, because we don't know what's going to happen. But we do have ideas on what might happen. So when things happen the way we hope them to happen, we will continue to kind of add in. But if it doesn't, then if it goes down here, I'm losing with 20 trades. I'll probably leave when it gets down to like 27. So we'll go in 29, maybe 30 average, 30, 31 average, and I'll leave 40 of them at 27, which would be a downward, right? It would be it'll be about a 10% loss. Right? But at least my risk down was 10%. I would have made, 50%, 60% going up. That risk reward is very, very nice to me. And that's another subject to go over, is how do you make decisions? Well, it's all based on risk reward. What's the comparison between your two events, right? Everything you do has a risk and has a reward. Everything in your everyday life, from eating food to swimming to everything, right? We have a risk reward. And we want to keep track of it, especially when we're in the market. So there's a certain amount of movement up that's your reward, and movement down as your risk. And you want to make sure you're, setting yourself well, so that you don't overextend your abilities. So that's another subject. That one's more going to be fundamental related. Because technical doesn't care. Technicals, some people just play technicals on gambling levels, like YOLOs, and put all their money in one move, and if it goes down, then they lose everything. It depends on your trading type. Those are the very offensive traders. Like 90% of their portfolio is just risk, and then 10% is like gold or something. I'm kind of 50-50, balance between offensive and defensive. I like to keep 50%. I like to keep it. I would consider myself offensive right now, but I like to, because the market's really crazy and there's a lot that can possibly happen with the gains in the next few. But I would prefer to be defensive. Generally, I would prefer to be defensive and 90%, safe investments, and 10% extremely risky. Like, that would be me still. I would risk it all. But the 10% is kind of the 10% that if you lose, it shouldn't make a difference in your life, right? So everyone's 10% is different. That's why it's important to know percentages, so you can get a perspective on these sort of ideas. Not that you're going to write somebody a letter about percentages and use percentages in everyday life, but being able to think in percentages helps you alleviate a lot of stress, because you can observe things differently. So yeah, that's it for this one, I think.